All right, let's dive into a financial puzzle that sounds, well, kind of impossible, right? How can a company's sales drop, but their profits actually go up? Today, we're going to unpack how Kingsmen Creatives pulled off this exact magic trick, turning what looks like bad news into a pretty sweet win. So, first things first, who are we even talking about? Kingsmen Creatives. If you've ever been to a cool exhibition, a theme park, or a high-end retail store, there's a good chance these guys were behind it. They've been in the business of creating experiences since way back in 1976. And yeah, they work with some of the biggest brands on the planet, so they are definitely a major player. And that brings us right back to our puzzle. It's a real head-scratcher for any investor, isn't it? Sales go down, but profits go up. How does that even work? It just doesn't feel right. But trust me, the numbers tell a story, so let's dig in and see what's really going on. Okay, check this out. Here are the hard numbers. Revenue, that's all the money coming in the door, it dropped by 4.1%. Not great, right? But then, look at the net profit. That actually jumped by 4.2%. So yeah, what in the world is happening behind the scenes here? All right, to solve this mystery, we've got to break it down. Part 1, let's figure out what's up with that revenue dip. So it turns out the drop wasn't happening everywhere in the company. The real story is in their biggest division, the exhibitions and attractions part. That segment saw a drop of almost 8%. But here's the key. It's not because they were losing customers. It's really just a timing thing. They had a bunch of huge projects that wrapped up in the previous year, so this year just looks a little smaller in comparison. Makes sense, right? Okay, so that explains the sales dip. It's more of a scheduling quirk than a real problem. Now for the really cool part. How did they end up with more money in their pocket? The whole secret sauce, it's all about something called gross profit margin. And don't worry, it's simpler than it sounds. Basically, for every single dollar they earned in sales, they just got better at keeping more of it as profit. They went from keeping about 23 cents of every dollar to almost 25 cents. Now that might sound like pocket change, but when you're talking hundreds of millions in revenue, that tiny change makes a huge difference to the bottom line. So how'd they pull that off? Well, they went into full-on efficiency mode. They got smarter about the direct costs for their projects. They trimmed down employee expenses, smaller team, lower bonuses. And then, get this, they absolutely slashed their interest payments on loans by a massive 42%. This wasn't just one thing. It was a total company-wide effort to be leaner. Okay, so they're clearly pros at managing their costs. That's great. But the big question for any investor is, can they keep it up? Is this sustainable? Let's pivot and take a peek at what their future looks like. Now, this number right here, this is what you love to see. They generated nearly $34 million in cash from just their day-to-day business. Look, profit on a spreadsheet is one thing, but cash is king. It's the lifeblood that keeps the lights on, and generating this much cash is a massive sign of a really, really healthy company. And it's not just us saying it, the leadership team is super optimistic. The CEO basically said the whole market is shifting right into their sweet spot, creating the kind of purpose-driven experiences that people are asking for. In other words, it sounds like they feel the wind is at their back. And that optimism, it's not just talk. They've got the numbers to back it up. A secured order book of $151 million. What that means is they already have that much work lined up for the coming year. That gives them a really clear and stable runway for future revenue. All right, so we've looked at the past, we've peeked at the future. What's the bottom line here? Let's tie it all together with the key takeaways. So here's the whole story in 4 key points. 1, that revenue dip seems to be a one-off timing issue, not a fundamental problem. 2, the company is excellent at managing its costs to drive up profits. 3, it's a cash-generating machine, which points to a strong, healthy business. And 4, its future looks secure, with a $151 million order book already in place. And just before we go, a quick reminder. This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.